Hello, everyone. Well, it's old news now, but Canada's latest inflation numbers came down to 2.7%, which was a little bit lower than was expected. And that, combined with lower than expected GDP growth, was enough for the Bank of Canada to finally lower rates for the first time in 4 years. So their overnight lending rate went from 5% down to 4.75%. And so the question is, what does that really mean for the Toronto real estate market? And aside from the obvious, that helps with buyer confidence for sure. That helps variable rate mortgage holders a little bit. Their rates come down by 25 basis points. But aside from that, I don't really think it'll have a huge impact on the Toronto market. For the 2 or 3 weeks leading up to that announcement, most economists had already predicted that there was going to be a rate cut in June. And so the market seems to have already priced that in. And, there was talk that if the Bank of Canada does lower the rates, will that create a big, flurry back into the market? But, from what I've seen so far, that really hasn't happened. And at the same time, U.S. inflation numbers just came out a few days ago, and they were also lower than expected. And that has contributed to the Canadian, the 5-year bond yield rate also coming down, which is now below 3.5%. And with the bond yield below 3.5%, that means that the 5-year fixed rates should start trending below 5%. And we've already seen that this week. There's a few rates, even from big banks like RBC, in the 4.89%, 4.94% range. So, as inflation continues, hopefully, to trend down, we should see the bond market, trend down or level off, and that will also bring down the 5-year mortgage fixed rates with it. And all of those things should help with buyer confidence and maybe some more buyers coming back to the market. But now let's talk about more specifically the Toronto market. And first, we can talk about condos. And the condos are still on shaky grounds. At the end of May, there was 6,350 active listings, condo listings in Toronto. That's the highest number of active listings ever in Toronto history. In May, there was also 4,953 new listings, and that was the second highest amount of new listings, again, for condos in Toronto ever. Now, that being said, the condo market does seem to have found some stable ground. The average price for both May and April was right around $783,000, which really, if you're talking about average price, is only about 5% off the very peaks back in 2022. So if you kind of break down the condo market a little bit more, again, we've talked about this in the past, but those end user condos, the condos that you'd want to live in, they're still doing okay. Condos with great views, or condos that are a little bit larger, or the ones that are in boutique buildings, or the hard lofts, they're still doing fine. The ones that are kind of dragging down prices and adding to those active and new listings are the investor condos. And the investor condos traditionally are those ones like, the small 480 square foot 1 bedrooms, or the 650 square foot 2 bedrooms with no view. Those are the ones that are really kind of continue to come to the market as investors are having a hard time coping with the higher borrowing costs. Then, if we look at the freehold market, it's doing good. It's not amazing, and it's not doing poorly by any means. Again, if we're looking strictly at the average sale price, which is 1.695 for all freehold types right now, with the exception of May of 2023, that average price of 1.695 of May of 2023 is the highest it's been in 2 years. If you look at January through March of this year, it was very active, and that was in anticipation of a potential April Bank of Canada announcement, which, the Bank of Canada held rates then. And then the market's been, quite calm since then. Good product, which is, good product means renovated homes in desirable neighborhoods. Those ones are still selling quickly, and in most cases, sellers are underpricing their homes, holding off offers, getting multiple offers, and selling over asking. And that's contributed to an average sale price to list price ratio of 104%, which means the average home is selling 4% above what its list price was. Now, that being said, there still are freehold homes that are struggling right now. So the homes that are in, again, less desirable neighborhoods, or the homes that need a bit more renovation, those ones tend to be sitting around a little bit longer. But the freehold market, all in all, is doing fine. If places are priced properly, if they show well, if they're staged, they will sell at the point we are right now. So then it's kind of like what happens in the summer. And so the next two Bank of Canada announcements, there's one on July 24th and the one after that is September 4th. I think, my opinion, if the Bank of Canada just sort of now maintains their 4.75% rate for the next two announcements, then the fall market will probably react sort of what we've seen in the last 2 or 3 months for the freehold market, which is just a nice calm market. Like, it's still competitive, but it's not crazy. You're not getting 8-10 offers on properties. You're getting 3 to 5 offers. So if rates remain unchanged at 4.75%, I think that will continue through the fall. If both July and September meetings result in rate cuts, and maybe we get down to 4.25% or 4% overnight lending rate, I think that will really add fuel to the fall market, and we might see a very, very active market in September. And if one of the two announcements holds rates and one decreases rates, then I think that it'll still be a pretty good market. But we'll continue to keep our eye on the market. I will report back in a month or so again. Until then, enjoy the start of summer. If you have any questions about your home, your neighborhood, or the market in general, please feel free to send me a DM or shoot me an email or call me anytime. Thank you again. Have a great June. Bye-bye.